Shares of Nike are dropping about 2.5% today. BTG downgraded the stock and warned they'll likely face a serious supply shortage, one that starts this holiday shopping season and could run through next spring, all because COVID has forced their key factories in Vietnam to shut down. Does the company risk missing out on big holiday sales? Mastercard's holiday forecast shows consumers are ready to spend thanks to pent-up savings and stimulus checks. Courtney Reagan joins me now with the numbers and a special guest. Courtney?
Hi, Kelly. So we've got 102 days left until Christmas, so why not let the shopping begin? Mastercard Spending Pulse does forecast that Santa will be ringing up those registers this year, predicting a total holiday sales increase of 7.4% compared to December 2020. That was before COVID vaccines were widely available, of course, with e-commerce predicted to grow almost 8% and in-store sales to grow more than 6.5% as consumers reemerge from lockdowns. Apparel is topping wish lists with sales expected to surge, get this, 46% during the core holiday selling season, lifting department store sales and luxury spending. So luxury, separate from jewelry, is forecast to increase a whopping 93%. Joining me now is Steve Sadov, Senior Advisor to Mastercard and former Chairman and CEO of Saks. Steve, it's so great to have you here with us. You know, we've seen a pretty big surge in consumer spending throughout the year as we've reemerged from lockdowns and left our houses finally. But when you're looking at the holiday season, is there something in particular that's going to drive spending to these levels that Mastercard is predicting?
Well, I think what you're seeing, Courtney, is a continuation of a trend you've seen over the last several months, which is a very strong, healthy consumer. There is a pent-up demand. The savings rate is high. The stock market is performing extremely well. And the consumer wants to get out and shop. And apparel sales forecast, and you see it in the July-August apparel numbers, which are stunningly high. They were as high as 75% growth. The consumer wants newness. They want some excitement. And they want to get into stores. People have talked about the stores being dead, but even with the growth of e-commerce, which is now at 18% of commerce, that means 82% of sales are in stores, and stores are growing even versus 2019.
Absolutely. I mean, there's just going to be a lot of factors at play this holiday season, not the least of which is all of this congestion that's still in the supply chain. Kelly talked about it a little bit based on what Nike was saying, but from your knowledge and your discussion with various retailers, is the holiday inventory here? I know that Janie and Jack, a children's retailer, has sent out emails to customers that basically says they're literally waiting for their ships to still come in with the inventory.
Shipments are coming in late. They're coming in very slow. And a number of retailers had ordered early. If this is going to be a seller season, you're going to run out of the hot items early. You're going to see markdowns and promotions less than you might on a normal year. Doesn't mean you're not going to see promotions, but this is going to be a very healthy margin season for the retailers, but it's also going to be a supply issue. And you're going to find that if you don't get it early, that's why MasterCard's talking about an early season, because the consumer's starting to be aware they better go out and get the products early because they may not be around, and you're not going to find it if it's an apparel item in the sizes you want, or if it's the hot toy item. You really do have to get out there early. It is a real issue relative to supply chains and costs.